Hey, Dave Melinda here, Positive Polarity Podcast. Hope things are going awesome for you. I have a word this week that I know all entrepreneurs and business owners are going to totally love, but I'm not going to tell you what that is right now. I'm going to just make you wait a minute, but I guarantee this is a word that we all learn about, we all talk about, but we definitely need to learn more about. So I have an awesome guy with me today, John Briggs. How are you today, sir?
I'm great. I'm so happy to be here.
Awesome. Excited to unpack this. And you are the founder of Incite Tax, correct?
I am, yeah.
That's pretty cool. So the word of the day is cash. Okay. And I know that it's going to be like, oh man, here we go. So some people are like super excited because they can never make enough. Some people want to give most of it away. Either one is great. So I can tell you from my perspective, John, money has not been a topic that I invested a lot of time in. I just go and make it, and then I let the rest of the people do whatever they need to do to it. And if there's any left at the end of the year, then I'm like, hey, how cool is that, right? So I don't know if that's the best tax strategy or not. I want to start with, talking about like this pandemic and the cash and the lockdowns and things. Is that really, have you seen that have a positive or a negative effect or no effect on cash flow?
I feel like every industry's experienced the pandemic slightly different.
Okay.
I am fortunate enough and really blessed that our firm, our CPA firm at Incite Tax, we did have a little bit of a short cash, like a couple bad months right when it happened, but
sure.
People still need to file their tax returns. And so they had the deadlines. And so we ended up recouping that. And so some of the later months closer to the tax deadlines were higher than usual. But we work with like a lot of gyms, for example, and it was a big problem, especially, you're talking about an industry that across the globe, every government at some point shut them down. Like legally, they would not be allowed to open.
Right.
It's really hard to receive revenue when you can't even be open.
Yeah.
It was tough. And then of course you have the PPP loans or the EIDL loans that we were able to get to help the businesses get through those cash things. And now, look, it was probably what we needed, but we're going to have to pay the piper at some point as a country. And so I think there might be some future issues as well.
Yeah, I'm from Milwaukee, and there's a big billboard downtown Milwaukee. I don't know who sponsors it, but it's the running tab of the national debt, and it's like, the numbers are going so fast, especially like the dollars and cents part, you can't even comprehend. And the dollars, I totally get that it's so hard to comprehend. From a business owner's perspective, though, we look at drilling down as to who's watching, who's listening today. And, is there a way that we could, moving forward, prepare for this? Is there a way that we as business owners, should be putting money away for this? And by this, I mean, any type of potential disaster. What are your recommendations to business owners now that we've gone through something like this? Is that outlook change for you moving forward?
I think the landscape of the next few years going forward is probably different than what we may have envisioned prior to the pandemic. I think just due to the possibility of inflation, I would recommend people hold the only bare minimum amount in a savings account, because that's the worst place to hold money in an inflationary period. I don't think we're going to go through a period of deflation. So I think it's either we keep the status quo we're at now, or we're going to have some inflation faster than what we've experienced in the past. And so the best way around that is to make sure your money is doing stuff in some sort of vehicle that is going to actually respond with the inflationary rate. Now, I'm not giving advice necessarily as a financial planner. I think I recommend everyone have one.
Sure.
But having your money in the market typically will respond to inflation. So that's a pretty safe place. And then things like real estate's not bad, right? Mm-hmm. But at the same time, nothing wrong with investing in your business either.
Sure.
Now, that being said, I think as business owners, we need to be aware that if we're going through this period, we may need to raise our prices. So we want to make sure we're not holding on for too long. If inflation ends up happening and we don't raise our prices close to the same time that we start feeling the effects, we could be hurting ourselves. Know that you're probably going to have to raise your prices if inflation does in fact happen, and just be prepared for that.
Gotcha. And that's a great point. And I don't know, John, if a lot of people, I think people hold off on raising prices as much as they can for a myriad of reasons. But I've always taken the opinion that I think we're better off if we do these small or incremental increases along the way. I have some clients in the construction industry and in the material supply industry. And I mean, we're seeing, I just talked to somebody today that was looking at a 9 or 9.5% increase on raw material, and I'm sure those numbers are not out of line. It's really hard to raise your prices 10%. I mean, that's a really hard thing to do. I get that you have to do it, and there's times you don't have a choice. I always think, though, that if you can do a quarter, and again, the numbers are arbitrary, but I think like 0.25% a quarter is the same as 1% increase in a year, or whatever, again, what the numbers are. So how do you help people that struggle with raising their prices? Sometimes we're reactionary, I guess, John, in that we wait until we have to raise rather than, coming in at this at a different angle. So I don't know, do you have any insight on that from a business owner's perspective?
Your philosophy works. I've actually seen it work as well. If they just have fewer price raises, but they're much larger when they do it.
Okay.
Ultimately, honestly, I think it comes down to the quality of the business and whether it's a product or a service you're offering. I think a price increase is a telltale sign of if you're doing a good job in the eyes of your clients. I remember one time I raised the price on a client. It had been multiple years, and just life got away from me, right? And I'm like, oh my gosh, you're not even paying close to what we're charging clients right now. And her response to my increase, and we're talking more than double her fee, she's like, well, I guess I was getting a pretty good deal in the past. Like, thanks for letting me know, and she moved forward. And that made me feel good from a standpoint of at least I'm delivering. And at that price point that I'm offering, she still feels like I'm delivering for her. But if you increase your prices and you start losing a bunch of clients, as a business owner, that's feedback to you that there's something in your process of delivery that you need to look at. But I've seen it both ways, and ultimately we're all fearful of it. Because I can talk about all I want, but it's frightening to raise your prices, and I think we just have to acknowledge that.
Well, but I think that let's be real here. If the average person raises their price, I think the person getting their price raised constantly thinks of all you're doing is putting more money in your pocket. I mean, that's kind of the farthest thing from really what happens. I mean, there's times that you raise your margin just purely to raise your margin to get more, revenue. That's one way. But like you're talking about here, John, prices are going up. I mean, gas has gone up significantly. Diesel has gone up $1 a gallon. So if you're in that situation where you're utilizing either one of those as part of your, day-to-day expenses, I mean, how would a business owner, let me ask it this way, John, if I'm running a bunch of trucks and my gas and diesel prices are fluctuating, going up and then coming back down, but mainly going up, how do you handle that? What's your advice from the cash flow standpoint?
Yeah, from a cash flow standpoint, you're probably writing a contract up, especially if your cost to deliver that service, like a cost of goods sold, is so directly correlated to a material cost you don't control. So truck drivers is one, construction workers is another, because that's another area. Like we're building a new space, and it literally is 5 times more expensive than what the initial quote was, which was pre-pandemic.
Yeah.
So one of the things I would recommend is you probably build into your contract. Our fee is X% plus cost.
Okay.
And that way, as cost fluctuates, you're still able to keep your margin.
Sure.
And if there ends up being a weird time period where the cost actually decreased, the client benefits as well.
Sure.
But yeah, in this case, we're talking about inflation. You have to build those types of agreements up front with your customers. And I think if you approach it the right way, most of them are going to understand.
Right.
They're going to be upset though if you try to change it at them after you make an agreement. And that's
Right.
what you don't want that to happen.
Yeah, no, that's a great point. And I think that there's a lot of people that they're riding the wave of hoping they don't have to say anything. And again, imagine in your case, right, where something went up 5 times. If you wouldn't have known about it until, it was time to tell people, it was final closeout time. That's, I think, the big fear in construction, right? Is that, you told me it was going to be 50 grand. And oh, by the way, now I need another couple $100,000 just to, I mean, and that's the first you're hearing of it. Obviously not a really good way to treat the customer. So I think, like you said, being upfront with it makes sense. Are you seeing the upfront part becoming part of contracts, becoming part of quotes? I mean, is it a legal situation where it's getting to that point where we have to not just verbally say, hey, John, I might have to, raise your price a little bit along the way. I think now is contractual a much smarter way to go.
It is a lot smarter way to go. And I think even all the time, contractually is a better way to go. And the reason being is you can agree on things verbally, but then if something changes and all of a sudden the agreement's no longer fair, that's hard, right? So what we're trying to do in the contracts is just build in fairness up front. And it's really better to know now if the client is going to agree to it or not agree to it. Because if you end up in the negotiations with the customer and they say, no, I'm not okay with that, it's like, not a problem. Then I don't have to do any work. But once I get in the work and now all of a sudden the client's like, well, I don't agree with that. You're stuck holding a bag that you're hoping now at this point, well, man, if maybe I can get something out of this client to minimize the damage. When in the first place, you could have just avoided the whole headache negotiating that hard part up front and just and going forward from there.
Wow. Yeah, I'll just uninstall everything I put on there for your John. I'll just tear your space down. I mean, that doesn't it's not like you can get your money back on any of that. So no, you bring up a great point. And I think that circling back what you said, the bank account right now is the worst place to put your money. I think that when I was a kid, my grandma put her money in 2 places. That was in the Bible was one, and in the mattress was the other.
Mattress,
So those were 2 places, probably a little bit worse than the bank. But as a business owner, with cash flow going up and down, and you need money, and sometimes you have to tap into your line of credit, and a variety of different things going on like that. Where are some places where one day I could have 50,000 in the bank and the next I need to borrow money? How do you help people through those cash flow strategies so that we can, at least feel a little bit better taking advantage of some of those opportunities?
Yeah, let me first go back to something you said earlier. As you were saying, tongue in cheek, you go, you work, and you're good at making the money, and hopefully other people are spending it the right way. So there's some money left over for you.
Right.
The reality is that is how a lot of business owners approach how they handle cash, which I think is why you mentioned it kind of jokingly.
Right.
And so our cash flow strategies are designed so that the owner isn't left hoping there's money left over. Because hope is not a great tactical strategy.
We say hope is not a sales strategy. So you're saying hope's not a tactical strategy. So I love it. That's awesome.
Nothing wrong with I love hope. Hope is important, but hope doesn't manage your cash. So I think what we need to realize is what's happening is business owners don't have a strategy. And so therefore they're being subject to this behavioral rule called Parkinson's law. And Parkinson's law says that the demand for something expands to match the supply. It's almost the opposite of supply demand theory.
Yep.
And what we're saying here is, as business owners, without a strategy, I have one operating business account. Think of that as a giant pile of supply. And your demand to use that cash is going to continue to increase until you no longer have any cash to spend. I mean, how often are we looking at the bank account? It's like, hey, should I pull the trigger on this expense? Oh, there's $5,000 in the bank account. Perfect, I'll do it. And then the very next day after you pay the $5,000, you get that bill. It's like, oh crap, I just spent the money that I needed to pay this. So what we want to do is create some cash flow strategies that help us put boundaries around this natural tendency that all of us have.
Okay.
And so part of that is creating a fake reality for ourselves that we have less money to spend than we really do. So we couple that with this idea of acknowledging, when I get $1 deposited into my business, it's not all mine. I've made commitments.
Yeah.
I've made commitments to my landlord. I've made commitments to my team members. Every government, but especially in the US, you are voluntarily forced to make a commitment to pay taxes.
Voluntarily forced. Yeah.
Yeah.
Nice.
Right. And so we have these different commitments that already exist. So of that $1, how much of that $1 is already used up? Why don't we set it aside to start with? So a strategy that we like is creating other bank accounts for those specific purposes. And there's a handful. So what I'm describing to you is a system called Profit First.
Okay.
If your readers haven't heard of it, it's a great read. Profit First by Mike Michalowicz. If they're in the fitness space, they can read my book. It's called Profit First for Micro Gyms. I took his concepts and applied it specifically to the fitness industry, but the concepts are the same. So 5 buckets we want. We want a bucket just to receive our income. So the sole purpose of this bank account is to receive customer deposits.
Okay.
Then we want one for owner's pay. If I'm working in the day-to-day, we have got to pay ourselves, and we've got to pay ourselves first. No longer are we hoping there's money left over. We're going to pay ourselves first so that we don't get burnt out, because we are the most important component of the business as the owner. Like, we love our team and they're very important, but at the end of the day, if you're not paying yourself a livable wage as an owner, you will get burnt out. And whatever passion you have for your business, you can't keep serving it. So owners pay for working in the day-to-day, and then a separate one for profit. Business owners often overlook the fact that they are investors in their own business. And so if you were to go out and buy like Walmart stock or something like that, you might get paid a dividend just for owning the stock. In fact, it's a common investment strategy. People only buy dividend paying stocks. Well, your company, you own the stock of that company, but have you consciously issued dividends to the owners, which may just be you? No, most people don't. So we want to make sure business owners get a return on their investment, or ROI as the finance world calls it. So that's why we set up a third account, and we call it Profit. The Profit account also functions in a great way because we only give ourselves half the balance once a quarter. The other half is going to serve as that, I talked about the bare minimum amount, kind of serves as a bare minimum emergency fund for ourselves.
Okay.
And I can tell you, because we work with more gym owners than any other accounting firm in the country, all of our gym owners who ran this system prior to COVID, they were able to stay in business because they had some emergency funds to rely upon.
Nice.
So like the system works really well.
Sure.
Okay, so we talked about income, owner's pay, profit, a tax account for our voluntarily forced payments of taxes.
Sure.
And the tax account is just for income taxes.
Okay.
Sales tax, payroll tax, those are considered operating expenses.
Okay.
But what we like about this is, usually as a business owner, let's say I take home $10,000 in the month, I'm usually now of the 10,000, I have to set aside some of that because I know I'm going to have to pay taxes later on it.
Sure.
Our thought is, you know what? The business is the one who generates the tax burden. Let's have the business save the money so that when I take $10,000 out of my owner's pay, I can live off the $10,000 because I'm setting aside tax money inside of my business.
Gotcha.
And I can tell you also that's a great strategy. How often do we get to April 15th and the accountant says you owe X amount in taxes, and you're like, that's not even possible. I didn't even make that much money. Well, I mean, based on all the financial information you gave me, you actually did.
Yeah.
Like, oh man. And then the fifth account is the one we're already familiar with. That's the operating expenses. This is where we pay all of our bills out of. But if we think about these 5 accounts now, and as part of the system, regularly we're transferring money from the income account into these other 4 accounts.
Sure.
We say to ourselves, all right, I've created a fake reality that I have less money to spend than I really do, because I'm only going to be looking at the dollars in my operating expense account to make business decisions now. So I have the money set aside for tax, but I'm not really seeing it as something that I'm able to spend.
Okay.
And I can say this as an accountant because we're probably the least creative human beings on the planet. Doing this model, you really can see how your creativity can set in as a business owner. You will find a way to run your business on the smaller dollar amount.
Okay.
It happens. I don't know if you're, some of us remember the movie Apollo 13 with like Tom Hanks.
Mm-hmm. Sure.
It's a story of they were trying to land on the moon, an air scrubber blows up on their way to the moon, and all of a sudden the mission became, how do we get these guys home alive? Because it's an air scrubber, right? If they don't fix it, they all die.
Sure.
Because
Sure.
they can't breathe.
Yeah.
Normally NASA takes about 3 months to finalize processes and fix things and all that stuff. Well, they didn't have 3 months. So there's a scene in the movie where they walk in and they throw a bunch of parts onto a boardroom table. And they say, okay, guys, these are the parts that people have to work with. Let's figure out how we help them fix their air scrubber. So limited resources. And apparently in real life, it took about 3 hours for them to come up with a solution.
Wow.
And it saved their lives.
Yeah.
And if we give ourselves the same thing in a less dramatic scenario where our lives aren't necessarily on the line, we can find ways to survive on limited resources. And that's kind of what we're trying to do here with this model.
Wow. That's really good. So the buckets are income, owner's pay, profit, tax account, and then operating expenses.
Yep.
So do you, on those 4, I mean, everything starts on the top one, and that's probably the one that's the least predictable, right? I mean, that's a little hard to predict.
Yep.
But once a dollar comes in, do you have like percentages, John, that you're thinking should be in each one of these, or how do you then break up that dollar once it comes in?
Yeah. And it's got to be on percentages because it's a little unpredictable, right?
Okay.
Like if I try to base it on the dollar amounts and then I don't have enough actual dollars come in to transfer the different accounts, the system doesn't work.
Sure.
So in the original book, Mike Michalowicz studied a bunch of financially healthy companies at different levels.
Okay.
Less than 250,000 all the way up to 10 million plus. And he found what are the percentages these healthy companies are putting towards these different buckets.
Okay.
So, I mean, if you Google Mike Michalowicz, he has a personal page. You can go to Profit First, the book. Like, there's free resources where you can find these tables if you really don't want to buy the book. But for a $20 investment, I'm telling you, like it's solid. What we do when we work with our clients is we first show them, look, this is based on the size of your company. This is what a healthy company is doing in these percentages.
Okay.
Very, very rarely is someone able to immediately jump to those percentages, because in most cases, we're talking like 30 to 40% of operating expenses that they got to cut.
Sure.
Right? Because
Okay.
they haven't had a model before. And so as you've probably seen with the companies you work with, as income increases, so often do our expenses increase at the same pace, if not faster than what our income. And so with a boundary system like this with Profit First, we can eliminate that. And so usually what we suggest, if someone's just starting off, first of all, people are listening to this and are like, I'm out, it's too complicated, multiple bank accounts, no way, not going to do it. At a minimum, if you set up at least a tax account and start setting aside like 2 or 3% of your revenue into that account, that alone is going to make a huge difference for you come tax time, because you've already set aside some cash for the tax burden that you will have to pay. And then, of course, if you don't pay it, the IRS just makes you pay even more later. So that's one of those expenses not worth putting off. And I kind of tell people, I learned this through a gym mentor, success precedes motivation. And so what he's saying here from his standpoint, if he's working with a gym member, he wants to get them to have a win inside of the gym as soon as possible so they keep coming back. Even if it's as simple as like, you couldn't do a push-up before and after a week, you could do a push-up. Awesome. Good work. Now all of a sudden they experience success. They're more motivated to come back and do it again. So what we're saying here is you're going to accomplish the same thing just by starting with one account. If you're unwilling to like look at the whole system, start with one account. You're going to experience that win come tax time when the accountant says, hey, you owe $5,000 in taxes. You're going to be like, oh no, where's 5,000? And you're going to look at the account and be like, oh my gosh, I got 6,000 saved. So success precedes motivation. Now that being said, for our clients who are doing the full thing, we often start with profit at 2%. We just want them in the habit of it because a lot of times we do have to cut back on some expenses and that takes time. Owners pay, honestly, it depends on the size of the company and what they have going on, but on smaller sized companies with less team, the owner's pay percentage is higher because the owner is doing most of the work. As the revenue continues to grow and you have expenses and team members, the percentage may go down, but ideally the cash take home is the same. I personally am around 20% of revenue that I put into the owner's pay bucket. But again, I've seen it anywhere from 10 to 50%. But again, profit 2%, tax. If you're really profitable, I would say no less than 7% is typically where most of our clients end up. But if they don't have a lot of taxable income, I mean, you could do 1 or 2%. Very rarely. So the max you usually put into that is 15%. And I've only had a few clients and their taxable income was more than $1 million that they needed to use the full 15%. And then of course, the big one that we're really trying to get down, which is normally going to be higher than what you want it to be, is your operating expense percentage. But you have to start somewhere. So start anywhere. Like as part of the system, what we recommend is you do a cash flow analysis, which is you're looking at the last 12 months and you're going to determine what percentage have I already put into these buckets in the past 12 months. Because even though you weren't conscious about it, you had all those things, right? And so let's create a before picture so I know where I'm at. I can look at an after picture where I can go, and I'm going to pick something in between for a nice reachable goal in the beginning. But yeah, it's not uncommon for us to see operating expense at 90% of revenue. And then it comes down to, we got to cut 10% in a month. What can we do? And usually when their expenses are that high, it's surprising how easy it is to cut 10%.
So does this, thanks for sharing that, by the way, does this include any type of company, an LLC, S Corp, C Corp? I mean, is that pretty much across the board, or do you see a little deviations here or there based on what structure the company is? In general, it works for all industries. It works for all type of entity structures, LLCs, S Corps. The C Corp is going to be a little bit different because the C Corp has its own tax burden. And then the owner has a separate tax burden. So my first word of advice would be, unless you're planning to go public, there are very few reasons why you would ever be a C Corp. If you are a C Corp, please call your accountant and ask him why you're a C Corp.
usually it's not a good idea.
Hopefully there's a bunch of people right now getting on their phone going, CPA, what the heck are we doing here? So that's awesome. I think that's such a, that's why we do these, because, we're so busy right now in life, and we're going a million miles an hour. And, a lot of times we don't take the time to slow ourselves down enough to understand, what are we doing wrong? What could we do better? That's why guys like John are here to come alongside you to be able to help you, with those things like raising your prices and cash flow and things like that. As we start to land this plane today, I was curious if you have some simple tips for business owners if they're overwhelmed, if they're undereducated, what's some, relief that we can give people listening right now?
Yeah, I mean, honestly, the first thing that comes to mind, and it sounds crazy, right? If I'm overwhelmed because I have too much to do, one of the best things I can do is give myself, like, what for some people is different, 10 minutes, 30 minutes, it might be a full day.
Mm-hmm.
You got to take the time off. I think often about Stephen R. Covey is the one who gets a lot of credit for it, but he's really quoting Viktor Frankl when he's talking about between stimulus and response is a space of time.
Mm-hmm.
And the reality is we as business owners, there's so much stimulus going on and there's so much need for us to respond. We have to consciously take that space in between. And every time I've done it, I come back clearer, more focused, less overwhelmed. Even though my workload hasn't changed, the number of tasks I have to get done hasn't changed, but I can approach it differently now that I've given myself that time. And I promise, the worst thing that's going to happen is you're going to have a client fire you because you didn't get the job done in time. But you got to take time for yourself as an owner. I think that's really important for us to acknowledge.
So how do we, and everybody was super excited until you said that, John, because I heard all the brakes go on. I saw the brake lights going on. Like I said, we're so busy. Yeah. So how do you just turn off the phone? How do you just turn off your brain? How did you do it? I guess I'm just looking for a personal, story on how you were able to just walk away from your business and walk away from your customers, your team, and just invest the time in yourself. It's a great concept. I love it. I just know that people listening right now are just shaking their head saying, John, you just don't understand. And I get that.
I
right.
Appreciate that.
Yeah. So I'm just curious, what did you do? Was it just a matter of shutting her down, or did you work your way into it? Help us understand how you did that.
So I'll first share this thought. Everybody is different and you have to find what works for you.
Sure.
So this is how I did it.
Yeah.
The first step is a trial run. And for me, that trial started with a complete day off with no contact from the company. Okay. And just for context, in case anyone's wondering, like, John's a psychopath and he's crazy and there's no way he understands what I go through. I have 30 plus team members. I personally have been managing hundreds of clients a year on top of the thousands of clients that our firm deals with. So I have a lot of workload. I'm not like some industries where someone has like 5 clients and they just pay a crazy amount of money. That's not my case. So I started with the trial run of a day off.
Okay.
And then you talk to your team, you get a debrief. Okay, what decision or what questions came up that you felt a decision was needed? And, what decision did you make? The first times you do this, they don't make any decisions because they know you're coming back the next day.
Right.
But it was good to start with, okay, where do team members need to be encouraged to take more accountability? Then one day becomes 2 days in a row.
Okay.
And you do the exact same process. And I did not check my email. I have email on my phone, but I was not going to check email. They know that they can't reach out to you. They know they can't call you. Like, you have to set the boundaries of what these like trial days look like.
Sure.
And you do the process until you can get a lot of days off in a row, because each time you're going to come back, with things that you need to improve as a team. So like maybe my first day trial happened, and then it took 2 weeks to fix some things before I could take another 2 days off.
Sure.
But I eventually got to the point where I took 4 weeks off between March 15th and April 15th, which are the 4 busiest weeks in a CPA firm.
Wow.
Because the team had proven that they could do it and that they knew what decisions they had the autonomy to make. Shockingly, it actually helps them feel empowered and have higher job satisfaction when they know that you trust them.
Yeah.
And so we got to that point, and now, like, for example, I build in time every Friday. I have 4 hours blocked off called think time. When, the only person allowed to put appointments during that time period are me. And so that I can take that space that I need once a week to think about the business. But yeah, again, I had to work into it. But those are the steps I would encourage people taking. You start with 1 day.
Yeah.
Debrief, fix, and just rinse and repeat, and do longer lengths of time each time.
That's awesome. I got to believe, though, John, that if you don't have a strong team, that you're going to have a pretty tough time of that, right? Because that team, although they're empowered and although they are engaged and they love what they do, that added work on there for somebody that doesn't like what they do, they're not engaged and they're not on board with what's going on in the company. I got to believe that just could be the straw that breaks the camel's back, right? So
absolutely. And in fact, I had that scenario. I think it was like a week test run. So I just took a week off. And when I came back, I found that one of the accountants who should have been willing and able to answer my personal clients' questions since I was out, said, he's like, no, I'm not going to do that. I don't have enough time. And he had different reasons. So it actually helps you identify the team members you need to replace as well, because that's part of fixing. Because I think every business owner should have the ability to take 4 weeks off if they want to. Not that they have to. I can tell you it was enlightening. I thought I would be bored out of my mind, and fastest 4 weeks of my life. It was amazing and really great. So every aspect of the business that needs to be fixed is going to pop up through this experience.
Wow. That's awesome. That is so cool. Thank you for sharing both of those. The bucket thing I'd never thought of in that perspective. So I appreciate that. And also, how to actually trial run this, this piece. So again, for the people that listen every week, our hope here is to be able to find new tools and new ideas. And I know if you're like me, you tend to resist and you tend to come up with a lot of excuses. While John was sitting here telling me this, there were voices in the back of my mind going, that'll never work. Well, that'll never work. Oh my gosh, I'm a solopreneur, John. That'll never work. All this stuff comes into my brain. So I'm on board with everybody that's coming up against these thoughts right now. As we talk about every week, I encourage you to sit with it for a little bit and, let it just percolate in your brain, because I'm guessing that something here is going to work and we can transform our life. And who doesn't want a month off? Maybe there's people listening that are like, oh my gosh, I'd be bored stiff after a month. That's what John thought. And then he found out that he wouldn't be bored. I'm sure you were excited to get back to work. I'm sure there was a love-hate of, oh my gosh, maybe I could do this full time, and just not work. So I appreciate the vulnerability that's here. I appreciate that. Again, these are some new concepts. So if you're listening, just, sit with it. Maybe invest $20 in the Profit First book. Maybe grab a copy of John's book. But John, if somebody is interested in this, is kind of really piqued their interest and they want to learn more about you, they want to maybe talk with you about the different buckets that we talked about, what's the best way for somebody to reach out and get a hold of you at Incite Tax?
Yeah, so through our website, it's going to be the best way. And it's Incite Tax, like to incite a riot, because we just think the government's really bad at spending our money. So INCITETAX.com. We have a contact us page, but feel free to check out our free resources. And our blog, we kind of like here, I try to get straight to the point and teach as many applicable things that business owners can implement. Our blogs are designed to be that way as well. We want to get straight to the point and talk about something that a business owner can walk away thinking, okay, that was a valuable use of my time.
Awesome. Thank you. So it's incitetax.com, INCITE tax.com, correct?
Yes.
And it's John Briggs. And one last question, I'm going to let you go. What would John Briggs' tip of the week be for anyone listening?
Cash is king. Take the time to look at your cash on a regular basis. You cannot stay in business without cash. As much as you want to drive revenue only and serve your clients, if there's not money left over, you aren't going to be in business for very long. So please take regular time in your schedule to look at it and manage it.
Wow, that is so cool. And if you don't, like for me, I just pay other people to do that for me as best that they can, because it's like, okay, I'm like that guy you were talking about. Hey, I just got $40,000 check in. Look at this truck is $40,000. I guess I can buy this, It's the Lord telling me this is it. This is his will, So, but that's where I think it's so helpful, is to find smart people to surround yourself with, and that's definitely why John is here, is to be able to come alongside you, like I said before. So thank you so much, John, for investing some time in our listeners. And we want to make sure that we are really doing a good job with our cash, because like you said, cash is king for that company. If without it, I've yet to see the hope strategy work at the bank. They don't normally take hope in exchange for a mortgage or hope in exchange for operating capital. But, if you know of a bank, or if you're interested in some hope here, John, I'll be more than happy to trade you that for some money. So,
oh, that's good. I'm going to have to use that in the future. That's really good.
Hey, if you make money on that, then you just remember where that came from. All right.
You got it.
That's awesome. Well, thank you, John, so much for this. It just was power packed 40 minutes of really good, solid information. And again, if you're listening and it's piqued an interest, please reach out to John. He would be honored to help. And again, if it's not John, make sure you talk to your CPA or your tax strategist, whoever, about what we just talked about. But I'd much rather you talk to John, because I'd love to learn how to take a month off and not feel guilty. It's that guilt back here that we will have to work on a different time. I'm going to invite you back and figure out how you work through that guilt, because I take a half a day off and I'm just like guilt running, chasing me down like crazy. So I got to learn how you did it. So another day we'll talk about that. But thank you so much, John, for everything, and look forward to chatting again soon.
Yeah, thanks for having me.